Hello guys, welcome back to another long trading video. In this one we're going to be doing some in-depth stock analysis on today's leading gapper, which is on CTIC. Now you can see, depending on what platform you are, you may see PULM and CLSN, which are up over 1,000% on the day. They're not actually up over 1,000% on the day. I'm guessing they're having some sort of reverse stock split. But either way, to get straight into the analysis, as always we go onto a clean daily chart so we can start seeing where the gap fills. Again, we don't tend to use gap fills as entries, but we do tend to use them as profit targets. So looking straight at this, we do have a gap fill obviously at the original gap created yesterday. But apart from that, there isn't really many gap fills. We can see this is considered a gap fill, not something I would personally use, but this level of around 325 to, we'll mark it out to around 340. Definitely keep an eye on this level. If the stock does continue up this level, I think it could be some heavy resistance, but it's not usually levels we don't trade off. We don't tend to plot our own levels, but just looking at this is quite a clear level, so definitely something maybe to look out for, and maybe just not trade within that area, just wait for it to either break out or stay below that level. But either way, for a gap fill, preference 190, so probably not a target we're going to end up actually using. But to get onto the standard deviation side of it, and we can actually see now these levels do make sense, because we can see today's price, the third deviation on the 4 hour is at 127, and the third deviation daily chart, third deviation on the daily is to 337. So you'll see, and this is why deviations work so well, is because they tend to line up with places of resistance or support where traders would usually mark their levels. And we can see that's exactly what happened here. Obviously these are the levels we look to just plot out because of this previous resistance, and that lines up literally dead on with our third deviations. So this whole level, if you're looking to trade it short, probably a good level to be shorting, and if you're long, probably a good area to be locking in profits. But if you are looking to get long at this kind of level we are at now, I would probably advise for it kind of like breaking above 340, coming back, retesting it, holding the level, and then waiting for that next kind of push if you're looking to go long. But obviously when you're this overbought, there's always that extreme risk, but I imagine if you're looking to trade these kind of stocks, you've got a strategy already. But if the price does continue, or if the stock does continue up, 364 and 370 will kind of be our final targets. By that I mean, past this level we can't really give you any resistance level, so if you're trading past this level, it's going to be something we can't kind of predict because it's just outside of our deviation bands. But if it does carry on breaking up, you can just use some common sense. You obviously got the 180-day high, maybe a resistance. You got the psychological level of $4, and then you've got the yearly high or 52-week high of $4.13. So again, if it does continue up and you're looking for levels, those will probably be effective levels. Now to the downside, we still have these second deviations at 198 and 298 and 290. First deviations at 253 and 262, and then statistical mean at 227. So now we've plotted all of these on. I'll go into a 1 minute chart because I prefer to do this on small cap stocks, because then it's a lot clearer to see what we're looking for the stock to do. And as we can see, obviously it had its massive gap. We did close up around 60%, came into these third deviations pre-market, sold off, which is something you would expect, and that's why we tend to look to short those levels. Came back, had actually dead on support on the second deviation, and then bounced within, oh, is that the first deviation? Sorry, I think that, yeah, that's the first deviation, and then bounced and kind of stayed within the zone of the second deviation. So this means going into tomorrow, if this is a stock you're looking to trade, from 325 to 340, we would kind of be more short bias on it. But as it's already touched that level, it's probably an area we wouldn't look to reshort, but if you're long, probably a good area to be looking in profits. Now to the downside, well, $3 kind of where we are now to 290. Again, this is kind of a support level, so we could kind of hold into this level into the open, or we could gap up or down. And if we gap up, obviously we're looking at those levels. If we gap down, then we're looking at support at 262 and 250. If we break this level and continue down, then we wouldn't look to hold short past 227, because that is statistical mean. So no matter what, if you're looking to trade this stock short, 227 should kind of be that final target, because once the price comes into there, it's a lot more of a gamble whether it's going to continue up, continue down or up. So usually that's a safe bet to be getting out at that level. But really, looking into tomorrow again, if prices fall down, we're looking at 262 and 250 support. If prices push up, if you're already long, again, probably a good idea to be looking in profits between 325 and 340. But as we touch this level pre-market, we probably wouldn't look to retrade it unless we touch this 340, because that hasn't yet been touched. And again, if we continue higher, 364, 370 would be the fourth deviation, so we can look to trade those levels. And at an extreme push, again, these are deviation levels, so 390, the $4 and the 413, but these are the psychological $4 level. 390 was the 180-day high, and then 413 was the 52-week high. So these are all levels, again, where depending on how you trade, they either levels to short or lock in profits. Or you wait for price to break above these levels, come back, test them as support, and if the level holds, maybe that's your strategy to get long, but that's more obviously down to you. These are just levels where we expect a movement to happen. So I hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.